Most people in the UK think investing is something reserved for people in suits working in Canary Wharf, shouting into phones and drinking coffee that costs more than your lunch. In fact, the majority of adults genuinely believe you need thousands of pounds just to get started. And to be fair, when you look at £100, it doesn't scream future wealth. It screams groceries, petrol, or a takeaway you'll slightly regret the next morning. But here's the truth most people never get told. £100 is more than enough to start investing properly in the UK. Not to get rich overnight, not to quit your job next month, and definitely not to buy a Lamborghini by Tuesday, but to start building long-term wealth the boring, reliable way. And boring in finance is actually a compliment. One of the biggest issues in the UK is that we're very good at saving, but not very good at investing. Huge amounts of money sit in current accounts or low-interest savings accounts earning less than inflation. That means your money isn't just safe, it's quietly shrinking. It's like putting ice in the sun and being surprised when it melts. The reason most people don't invest usually comes down to three things. They think they need a big lump sum, they think investing is complicated and full of jargon designed to make you feel stupid, and they're scared of losing money. Which is fair, because nobody likes seeing their balance go down, even temporarily. So people wait, they wait for a raise, a bonus, or the mythical right time, and somehow the right time never arrives. What does arrive, though, is lost time, and in investing, time is everything. Compounding doesn't care how much you earn or how clever you are. It cares about consistency and patience. Starting 5 years later can mean missing out on years, sometimes decades, of growth. The market rewards people who show up early and stay put, not the people who try to be clever for 5 minutes and then panic. The good news is that investing in the UK has never been easier. Platforms like Trading 212, Free Trade and Vanguard UK allow you to start with very small amounts using fractional shares. That means you don't need hundreds of pounds to buy a share in Apple or Microsoft. You can buy a slice. Think of it less like buying the whole pizza and more like grabbing a slice and still getting full. Even more important is using a stocks and shares individual savings account. This is one of the most generous investing perks available to ordinary people in the UK, and somehow it's still underused. Any gains or dividends inside an ISA are completely tax-free, and you can invest up to £20,000 each tax year. No capital gains tax, no dividend tax. HMRC doesn't get a cut, which already makes it worth paying attention to. With just £100, you can also diversify properly. Instead of trying to pick individual stocks, which, let's be honest, most people base on vibes and headlines, you can invest in a low-cost index fund or ETF, something that tracks the global market or the S&P 500. One simple investment gives you exposure to hundreds or even thousands of companies around the world. It's not exciting dinner party conversation, but it works. Let me put some numbers on this. Imagine someone in the UK starts with £100 and then adds £50 a month into a global index fund inside a stocks and shares ISA. No trading apps open every 5 minutes. No panic selling. No pretending to be a hedge fund manager on a lunch break. Just consistency. Assuming long-term average market returns of around 7% per year. After 10 years, that portfolio could be worth over £10,000, and all of it is tax-free. That first £100 didn't change their life overnight. It didn't make headlines, but it did something far more important. It broke the mental barrier. It turned investing from something I'll do one day into something that actually happens. And once the habit is built, the numbers eventually follow. So if you're waiting for the perfect time or a bigger amount, here's the reality. There is no perfect time. There's just earlier and later, and earlier almost always wins. You don't need expert knowledge. You don't need inside tips. You need a platform, a stocks and shares ISA, and the discipline to stay consistent, even when the market wobbles and your balance looks a bit ugly for a while. That first £100 isn't about returns. It's about taking control and letting your money do at least some of the work, instead of making you do all of it forever. And just to be clear, because it matters, the value of investments can go down as well as up, and you may get back less than you invest. Past performance isn't a reliable indicator of future results. This is for educational purposes only, not financial advice.